Hello, everyone, and welcome to At Barrons. I'm Andy Serwer, and welcome to our guest, Doug Peterson, CEO of S&P Global. Doug, great to see you.
Great, thanks, Andy. It's great to be here today.
So your company's gone through a lot of changes, but let's start by you talking about exactly what S&P Global does today, the lines of business, et cetera.
Yeah, so S&P Global is a diversified financial data and analytics company. We have the rating agency, an index business, which everybody knows through the S&P 500 and Dow Jones. We have market intelligence, which has information for financial markets, all the way from investor relations to data on desktops for bankers. We have a commodity insights business, which includes the Brent benchmark for oil prices, and then a mobility sector, which includes a company called Carfax.
So we were just talking. Used to be the old McGraw-Hill company right here on 6th Avenue. We both worked here for a while. What is that? And since then, I should say, you guys have bought companies, sold companies, or along the way, you've bought and sold a lot of companies. What does that legacy, though, mean to this company at this point?
Well, the legacy is important. In fact, the legacy goes back to the 1860s when Henry Varnum Poor started the very first financial information book. And it was about railroads and canals, which, as you know, were opening up the United States to the West at that time. And so we think about that legacy because it gives us the ability to always be opening up markets and information so people can make decisions. But then more recently, about 15 years ago, there was a shift in the board of directors of McGraw-Hill to start thinking about the difference between traditional publishing and financial markets. And I joined 13 years ago when that thinking had started. When I became CEO, we'd already just sold McGraw-Hill Education, and it gave me an opportunity to say, we're going to focus on essential intelligence for financial markets. And through that, I was able to do a lot of divestitures, shift the company towards technology, towards innovation, towards speed, towards serving markets, which have a different approach than when you're going to be providing books for education.
And along the way, you changed the name. And I'm just curious, why the global with S&P Global? Why not just Standard & Poor's or just S&P?
That was, obviously, you sit together in a room with some of your colleagues. We had a very small team. There were only 4 of us. And we did a lot of research. We went back to all of the different marketing information we'd seen over the years, some client studies, some employee studies. And we decided it had to be either Standard & Poor's with something or S&P with something. It could have been those alone. But global has 2 implications. One is globality in the service we provide, and the other is being global. We can't do anything these days without understanding what are the implications in every single part of the world. One of the reasons that clients use us is because we're going to provide them information about the entire globe, not just one market. We're not a New York-centric company. We're a global company.
Right. Data companies like yourselves have done very, very well recently. We'll get back to that. But I'm just wondering about the plethora of data. I mean, is there almost too much? How do customers choose what data sets to get?
Well, it's not about having too much data. There's more data than ever. There's more data in your phone than ever. It's being able to harness that data and use it to make decisions. And this is where we come in. We've been a data company for so long that we now know how to manage data. We know how to understand the difference between something that's proprietary and something that's commoditized. And we're able to now tokenize it and be able to apply it into artificial intelligence, which obviously is one of the new theaters that's been opening up.
Yeah, we'll talk about AI as well. Sustainability and sustainability finance is something that you're keen on. Why is that?
Well, this goes back to about 13 years ago. I was at a conference in Copenhagen, and all of the Northern Europeans were talking about climate and ESG, and the New Yorkers that were there had no clue what they were talking about. And I came back here to New York and said, if this theme is so important to a really critical part of the world, especially a part of the world that made all their wealth from oil, these are places like Norway, which made all their wealth from oil and gas. And I said, there's something here. And we started studying what was happening with the movement for ESG, for sustainability, and started little by either building different products or by making some acquisitions to provide independent analytical information so that markets can make decisions about their sustainability profile.
But isn't there pushback against that at this point? And also, 2 questions. And what specifically is the role of S&P Global here?
Let me start with that. And the role of S&P Global is to provide information, whether it's benchmarks, scores, analytics. And let me give you a couple of examples. We would provide a score for companies about their E and S and their G analytics for that company itself. And we have thousands of those for companies around the world. More importantly, there's a shift from scores to data and analytics. We have information about what's called physical risk, buildings, ports, airports, how much carbon do they emit, what is their risk related to flooding or to fire or to climate change. So these are things that we have, that kind of information for the markets. Now, why is it important what's happening with the pushback? Over the last couple of years, there's been pushback from various people in the United States, especially some of the red states, as they call them, against what they call the wokeness. And what we've said to those states is that we're not providing any kind of solution. We're just providing the data so people can make decisions. But let me step it back a second. I was in Europe a few weeks ago, and when I was in Europe, this is booming faster than ever. It hasn't gone away. One of the values of having global in our name, we're providing these services and this information globally. And the Europeans were asking, well, what's wrong with the United States? There's a lot of change going on globally, and we need your independent voice to provide the information. Finally, despite some of the pushback in the United States, companies are still providing their profile. They're publishing their sustainability record, they're publishing their carbon attribution, they're publishing how much energy they're using, et cetera. So it's not going away.
I want to shift and ask you about AI, Doug, and it seems to me that you could look at this as a problem or an opportunity. I mean, someone could say, well, I don't need S&P Global, I can just use AI. I'm sure that's probably not the case, but it might be a threat. How is it an opportunity?
Well, for us, it is an opportunity, and it has to do with tools that allow you to gather information from text in particular, which has been digitized. In the past, when you go back, it was numbers that were digitized, and you were able to start using information tools like traditional machine learning AI to gather information from your numbers and text as well. But the generative AI is allowing you to use large data sets that the artificial intelligence, large language models that they call them, can learn everything inside of that text and then provide you with a response which probabilistically should be the best response for the question that you're asking. What does that mean for us? It means that we can use our data with generative AI models and provide faster, even more well-informed answers to our customers.
Rating agencies like S&P didn't anticipate the problems of 2007 and 2008. What are you doing to make sure that doesn't happen again?
Well, this goes back to the good old-fashioned communications. It's not the artificial intelligence that we're using there today, although we are using it more and more. But what I see in that period before the financial crisis, we had different teams inside of Standard & Poor's that were each providing their own analysis about what's happening in the market. So you had a financial institutions team that was looking at the banks. You had a securitization team that was looking at structured finance products. You had a sovereign analytical team that was looking at governments and what was happening with their finances, with their debt, et cetera. But these teams weren't talking to each other. And so what we have now is something called a credit conditions committee that meets every quarter and more frequently if we need to. And we get everybody from the entire globe, from every sector, and they sit together with our economists and they compare notes what's happening in the world. And because of that, we identify trends very early where we see issues with real estate markets in Canada or China, or automotive issues in certain parts of the world where you see the automotive markets going haywire. What are the implications of that? Right now, we're spending a lot of time on interest rates, macroeconomic policy, and different risks, geopolitical risks around the world.
Since you became CEO, the stock has way outperformed the market, doubled the S&P 500, which you're familiar with. You now have a $135 billion market cap. Both of those things surprised me. What went right? What happened? Besides your acumen.
Yeah. Well, it goes back to having the right strategy and the right people. There's nothing more important being a CEO than having a strategy and a vision that you can use to basically have the entire organization stand behind, be motivated by. It's about motivation and inspiration, something that's always being driven by the outside in. You can't have a great strategy if you just think of a good strategy. It has to be driven by the needs of the customers and the evolution of the market. So over the years, we've always had a very simple strategy. Right now, it's called Powering Global Markets. And then the other thing is you can't execute if you don't have a really good team. And our approach towards people is always around development. We want to find people that are motivated by what we do. They're excited about markets. They love their jobs, and they feel like they can always contribute every day and grow and learn and move to the next best thing.
All right, now having said that, you had an earnings miss earlier this year. What happened there?
That was I guess the fourth quarter. This last earnings call, we beat our earnings. So first quarter we were well above.
Yes.
We beat our earnings as well as we raised our guidance. We did a merger 2 years ago with IHS Markit. It was the largest merger announced in 2020. It took a little while to get it closed, and we're now well into it, 2 years into it. We've beat all of our projections that we had put in place for revenue synergies and expense synergies. The expense synergies we're done with, and the revenue synergies, we're now on track for meeting those in 2026. But the fourth quarter last year, we saw some issues with our market intelligence business and the financial markets generally. We saw a slowdown in the large banks. The large banks slowed down their hiring. They slowed down the amount of services they needed from us, and that basically hit us a little bit. It was a very minor issue, but it did miss in the bottom line, especially on our margin target.
Yeah, I mean, that raises the question, Doug, what sort of market conditions and how does a changing economy affect your business? I mean, data is the new oil, I get that, but there's got to be some cyclicality as well.
Yeah, we have two types of businesses, oversimplifying it, but we have businesses that are subscription-based revenue. Last quarter, our subscription-based businesses grew 8%, and they're pretty general steady growers. They grow 6 to 8% generally, 7-ish. We think we've been able to build some innovation to get them towards higher growth, the 7 to 8% range. And then we have other businesses that are market dependent. As an example, issuance of bonds is going to impact the ratings revenue. Let's say that's about 50-50, a subscription-like revenue, and 50% of the business and ratings is going to be based off of issuance. So if there's more issuance, we're going to see more revenue. If there's less issuance, less revenue. So there's some volatility there. A little bit of volatility in what we call the AUM-based revenue of our index business. That's based on the level of the S&P 500, generally, you want to call it that, and AUMs that grow and shrink based on flow, but also on the valuation of the S&P 500. And then we have a few businesses here and there that depend on IPOs and debt issuance and things like that. So generally speaking, the volatility in our earnings are going to come from that type of, we call it market-based revenues.
All right, you have so much data and information at your disposal, at your fingertips. What do you look at in particular across your company, and what are you seeing right now in terms of the future?
One of the things that's a joy of working where I work is to have access to so much data. And one of the things that we put in place is what we call a current affairs group. And we get together with our chief economist, somebody from the index business, somebody from our commodities business, people who have political backgrounds, and we sit together and brainstorm at least once a quarter or whenever something large is going to happen. And so I rely heavily on the input from these people. Most of them publish, like our chief economist, Paul Grunwald, so I read what he writes. You might know Dan Yergin. Dan Yergin is somebody who's in the company, so he's a vice chairman. I rely on Dan's thoughts and what he's seeing in the oil markets and the economics. And so I have people that I rely on. I read what they publish, but then getting them together and listening to what's happening in markets to me is really valuable. What am I watching right now? Interest rates. So if you said, is there any one thing I'm watching? It's interest rates, and it's not just the Fed. I'm watching the ECB, BOJ for Japan, the BOE in England. And so I'm watching the interest rates very closely. And then secondarily, and maybe just as important, I'm also watching what's happening on the geopolitical front.
Okay, and what are you seeing?
On interest rates, we had started the year, and you might remember this, at the beginning there's this really rosy picture. Economists at a couple of large banks said the interest rates are going to go down 6 or 7 times starting in February. Well, it's not February anymore, and they haven't come down. Our economists at the time, our house view was rates would go down 3 times by the U.S. Fed starting in June. We've just modified that to interest rates will go down once this year in the fourth quarter, probably not till December, but with then a steady continuation of rates going down after that. We also see that the U.S. has very robust growth, and we don't see anything that's going to slow that down right now. There's really robust employment levels. There's still cash in people's accounts. Maybe the lower quartile has started using up the rest of their cash and their savings. But generally speaking, the corporate sector has access to credit, and it's a lot cheaper than it had been. Spreads are as low as they've ever been. 2 things I watch are high yield spreads and investment grade spreads, and they're almost at historical lows right now. And that's why you see a flood of people coming to the market. M&A hasn't really come back yet. There's been some M&A, but we expect it's going to also start coming in as interest rates stabilize, et cetera. So interest rates is something to watch. On the geopolitical front, obviously, we're looking at the Middle East. We're looking at what's happening in Asia. We look at the Ukraine-Russia situation. And as of right now, we don't see anything that's going to slow down those conflicts. It would be great from a personal point of view and a societal point of view that we see those conflicts go away, but we're watching them carefully, so what kind of impact they have. Mostly they have an impact on energy markets and on what you want to call people's thinking about the supply chains. What kind of changes do they have on supply chains and where people are sourcing their goods and services?
Doug, you worked at Citibank for a couple decades, through good times and bad. What did you learn there? What was your takeaway?
Well, one of my takeaways was you've got to have great leadership. And I learned this from being on the ground, from watching the leaders at the organization. When you miss something, it's because you didn't have your eyes open. You're not looking at customers. One of the things that I go back to, when I worked at Citi, I worked in the emerging markets for 10 years, and I worked 6 years in Japan, 10 years in Latin America. And it gave me this view that the customers are going to be where you get your information. It was important for me to not spend all my time at the headquarters office or where you have a little internal cabal of people that think they know what's going on and are going to make all the decisions. But if you don't have information from the customers, if you're not in the markets, you can make really poorly informed decisions.
How was Montevideo?
It was a jewel. Uruguay is a jewel of Latin America. It is one of the best places in the world. You must have been there to Punta del Este for a summer vacation or something, but Uruguay is a country with really, really well-educated people, hardworking. It has this tough position being sandwiched between Argentina and Brazil, which seem to be very volatile countries, but Uruguay was one of our highlights.
My understanding is you grew up in New Mexico or born there. Do you still have ties to that state?
I do. I was born and raised in New Mexico. My mom is there. She's 94. She'll be 95 this summer. So I go see her frequently and visit there. It's where when I get to Santa Fe, New Mexico, I feel like I'm home. I haven't lived there since I was 18 years old, but it's still in my heart. It's my home.
A great town. And final question, Doug, why should investors buy S&P Global stock right now? And what is the prognosis going forward?
Well, first of all, we have a strong strategy. Our strategic statement of powering global markets is more powerful than ever, given what's happening with the need to make sense of what's happening in the world around us. And we have the data and the analytics to bring you that kind of information to make informed decisions. Next, you think about what we've learned over the years, and already starting as a data and a content company with proprietary content, with this new revolution taking place with generative AI that everybody's talking about. We're applying that really rapidly. We already have in place a chief AI officer. We have an artificial intelligence governance structure. We have hundreds of proofs of concepts in the company and products in the market right now being tested. But very importantly, it has to do with the quality of our people who are always looking to serve the markets, to serve their customers, to look around corners, and to make sure that we're on a strong growth trajectory. That's what it's all about at S&P Global.
Doug Peterson, CEO of S&P Global, thank you so much for joining us.
Thank you, Andy.
This is at Barrons. I'm Andy Serwer. We'll catch you next time.